Today we are going to talk about both the market for February and the outlook for next week. Let's first review the price action in January and then move on to February and next week's potential movements. Bitcoin's high in January was at 97,951, reaching two of our targets. The low was at 75,721, hitting one target, and it came very close to breaking below the 74 level. Ethereum's high in January was at 3,403, reaching one target. Ethereum performed weaker than Bitcoin overall. The low was at 2,203, completing all of its downside targets. Ethereum suddenly became very fragile again. 2 days ago, I did a poll about the January monthly close. Basically, the third group of participants got it right. Unfortunately, that poll was blocked by Xiaohongshu that same night. It has been really difficult to post anything there recently. Let's quickly recap our view on January. Previously, we said that from January 13th to February 3rd would likely be a period of either decline or consolidation. The best case scenario was holding the 80 level without breaking below it, while the worst case scenario was seeing a range between 78 and 71. I have repeated this many times because the 74 level is the key bull-bear dividing line for this cycle, so holding it in January was extremely important. Before January 13th, my view was mainly rebound or consolidation. On the 13th, I originally didn't think the market would break above 94, but on the 4-hour candle, the price reversed upward instead. I actually warned in advance that this area could become the January high. After that high was set, the second half of January had no other options. It was either decline or consolidation. However, I misjudged the riskiest phase. At that time, I was focusing on January 13th to January 25th and expected that after the 25th, the market would move into a moving average oscillation. Unfortunately, that view was too optimistic. I did not anticipate that the most dangerous area would actually start from January 29th. Before the 25th, I had already warned that the moving averages were arranged in a very risky way. If they could not flatten, they would turn into a bearish alignment and cause a large drop. That is why I kept emphasizing that 88 must hold. If you were trading, your stop loss should definitely have been placed there. At the end of episode 322, I had already started reminding everyone to pay attention to whether Bitcoin could avoid breaking below 88 in the remaining half of the month, meaning whether the 86 to 89 area could hold. Breaking below 88 would not be good, because 88 is the strength-weakness dividing line for January, and it would not make sense for the market makers to break it. On the 26th, the market opened lower, but then pushed back up, and that happened right as I was viewing the risk zone as ending on the 25th. At that time, the moving averages also looked slightly flatter, which made me start to imagine that the risk was ending, but unfortunately, price still could not hold above the key 87 level. That day, after writing the daily report, I specifically added a reminder that if it could not hold, it would likely drop to the weekly low range of 85 to 82. Still, I did not actually expect such a violent crash. The move there was really crazy. I personally had no trading plan and was not watching the screen. After writing the reminder, I just went to sleep. I did nothing else. I began accumulating around an average of 84, and when price dropped into the 70 range, I added more. Because, as I told you before, I had no certainty about how far this drop would go, so I chose to enter in batches. Next, let's look at last week, from January 26th to January 31st. Bitcoin's highest close that week was at $90,603. It never managed to stand firmly above the midpoint. The lowest point was $75,721, which completed all downside targets. Ethereum's highest close that week was at $3,045. Like Bitcoin, it also failed to hold the midpoint. The lowest close was $2,203, which also completed all downside targets. Next week is from February 1st to February 7th. I will not read out the specific levels. You can take a screenshot and save them. Bitcoin needs to stand firmly above $81,700 before we can expect upward targets. Ethereum needs to stand firmly above $2,565 before we can expect upward targets. If the midpoint cannot be held, you need to be very clear that upward targets will not be possible. Finally, let's talk about the overall trend for February. I have already discussed this in the daily reports. February is clearly a critical rebuilding month. I originally also viewed February as a rebuilding phase, but the nature of it may change, because previously I was interpreting everything from a bull market perspective. If the bull market is no longer valid, then it will be very difficult to see another historical high afterward. So February is a very crucial month. First, in February, price must return to the 88 level. It should not close and stay below 74, and it is even less desirable to see levels starting with 6. Also, February must break above the 98 area. If all of these conditions cannot be met, I do not think we should be dreaming about 120,000 or 130,000 this year. If we can reach 110,000, I would already consider that excellent, because the market afterward would most likely be dominated by rebounds rather than a true bull run, which is more suitable for a bearish environment. If the situation becomes even worse, then every zone that should have produced an upward move may unfortunately end up being replaced by consolidation instead. Now for the overall February framework, honestly, there is not much more to say. Given the current situation, we still need to wait until February 3rd to see whether the market can begin to repair itself. The best repair window would ideally be completed before February 14th. After the 14th, if the market can at least consolidate, that would already be the best outcome, because confidence has not yet returned. In addition, Mercury will go retrograde around February 26th, so February will likely continue to feel difficult and slow. Alright, that's it for today. Weekly forecasts should never be viewed alone. They must be combined with daily and monthly charts. The daily charts fill in what the weekly might miss. I wish you all the best. May you buy at the bottom and sell at the top. Don't forget to like, share, and subscribe to my channel if you found this helpful. Send this to your friends too. Thanks for watching, and I'll see you in the next one.